Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, September 14th. Today I'm back with my weekly check of the broad market indices. I have been accused of rambling during these videos, so I'm going to make an effort to keep everything to topic today and keep them short. So basically, let's look at last week's charts. At the time, we were talking about the employment report, which had come out and was rather nasty. The market was selling off. And the point that I made was that even though we were hit with some pretty seemingly nasty news, the charts didn't look that bad. The SPX was still holding this uptrend, and we were sitting just below this resistance, only showing a minor rejection at that point. When we turn to this week's charts, we see that the SPX actually bounced right off that little uptrending line and is now right back at that resistance zone. When I left last week, I said that I was watching the support from those lows right there. The SPX actually didn't break that, didn't even really test it. We saw the bounce, and now we're sitting right below that resistance. When we look at the Dow, we see it's actually sort of floating in this congestion zone here. I'd identified this area here, and at this point, it almost looks like the Dow's sort of been bouncing off that as support, sort of bounded by that as support and the 50-day moving average right there. The comp sitting just below resistance, sort of showing that same little uptrend that the SPX is showing. The RUT having a little bit more trouble here, but it's just sort of been in the congestion zone, this sort of wide choppy area. Didn't quite make it up to this zone here. Actually kind of got rejected at the 50-day moving average, but still holding above the recent lows. So as far as takeaways, if I were stranded on an island and these charts were the only information that I had, I would actually look at this and say they're fairly constructive looking. And what I'm basically saying is you had this low here on the SPX, we had this low here, we had this low here. So you've got a pattern of ascending lows. Meanwhile, you're pushing into resistance. And basically what that implies is that this test at resistance, we're not seeing a very large rejection, which if you've been reading the blog recently, you know that's something I look at is encouraging. However, I'm not on an island and I do have other information, and I think there's something else to consider here, and that's obviously next week's Fed meeting. And when you view it in that context, basically this pattern looks more like waiting. Nobody's really looking to make a big commitment here. If you've been reading our website recently, you've seen Bernie make the argument that the Fed not only needs to cut rates, but needs to make a 50 basis point cut. The expectations are that there's going to be a cut at this point, and I think if we don't see anything, there's going to be disappointment. So with that in mind, I'm not sure that I would look at the charts at this juncture as basically offering any sort of predictive power. Even any sort of underlying supply-demand issues. Basically, we've got to wait and see what the Fed's going to do and gauge the reaction off of that. Overhead resistance, we're sitting just below that. So obviously a move above that after the Fed would be a very encouraging sign. If we see a rejection, basically those lows back in here are going to be a key level. So at this point, I would basically say let's hold off and see what the Fed does here on Tuesday. So check back with the blog, and I'll identify some levels at that point. Have a great weekend.